Welcome back to How to Does the Stock Market Work, and this is a part 2. The previous video continues. So let's start. The purchasing demand. An example might be this: say you post something on the crazy list for 100. After posting you purchase your term all causes right now. Most people at this point might start thinking that they price their item too low and thus, thus rise their price until in the theory is reached the most that the one single last buyer will be buy for. Conversely, if you receive an offer until the someone bites, this is the similar to how the stock market move. The expect that the price rise and the drop is not done consci- consciously, rather by billion of the transaction every second. Supply and the demand which bring has their topic. For every stock purchase for sale there has to be buyer and the seller. If there are more buyer then the price will be go up. For if there are more seller their price will be go down. Trader often night the talk about the bird ask the spade with the basically mean the difference between the bird are what someone is willing to pay to buy a share some and the ask and to sell share. The supply and the demand, it's the fairly simple to understand. At the end of day, if more people want to smoothing that the thing, this is a causes of stock will be more expensive that the start to stock market. The matching buyer to the seller was done manually on the trading floor, who it's the mostly done the automatically by trading system. This allows the market to move much faster and create the breakneck space that any casual casual onlooker. Now you meet the wondering will be do not have time to understand this and should even the invest anyway, even earn 2 to 3% just keeping it in the bank on higher side. Its will be answer is pretty simple. If you go it the right, you can make a lot of money using the common example that you might have the hard. If bought $1,000 of Amazon stock back in the 1998, you did have the roughly long investment the timeline, but most people would agree that the purchase would be worth its. Companies often provide a return rates. Companies often provide a return rates like 30 to 70% each year, which is the still going build you a lot of wealth compared to 2-3% each year. Keep it in bank account in sense has long as you are able to make ascensions as long more than 3% in the stock market. You are doing a better with buyer money than just keeping it the bank. Now that we understood that stock market to be a real time marketplace where you can purchase a part of companies, you figure out the how the first things you will need. So need a trading account. You can start one with a common provider like either or other major banking institution, and but can also use a free trading service like Robinhood. Common trading service will charge a fee for every trade you make, but mean you can invest all of your money in company and not worry don't worry about paying below the start. Robinhood account download that you did like once you have an account in any trading service, multiply company's stock to purchase, which is the agreeable and part. You also have a certain amount of money. Stock range from a 5 cent to thousand of dollar. The key about the stock is that you do not nothing if want to invest in Amazon. You will be need it. Let's Ethan $100 at last at the time of the recording to get started. But why can a buy much cheaper will start rated the companies of $5 before you make a purchase? You want to the extensive research to make sure you understood with the companies does the make money, the whether they are a good financial standing, and also see what expect think about the company and whether you think about companies should buy it. The end of day you do have assume some risk of it's important you only invest money you are capable of the surviving without it the list for the little will of until certain. This video is a part 2 and part 3 is coming soon, so like, share, subscribe Speed Info YouTube channel.